Friends and enemies, welcome to another episode of the Canadian Bitcoiners podcast. I have yet again been roped into an early interview session, not 7 o'clock, 4 o'clock. The bell just rung on markets. We had a bounce back day. You guys probably already know that if you're in the Bitcoin world. And I have none other than Kevin Muir, the macro tourist. Great Substack. I wish I subscribed to it. I don't. It's a little too expensive for me. I'm not an institutional investor. I just buy Bitcoin and index funds. What can I say? I know you guys don't like the second half of that statement, but it is what it is. Kev, also the co-host of one of my favorite shows, the Market Huddle. I like it for two reasons. One, like I said yesterday, I think Kev and Patrick Srezna, the co-host, they have a really good rapport with each other, the same way Len and I do. And the other reason I like it is because it takes the subject matter seriously, but they don't take themselves too seriously, which I appreciate. And is a fine line to walk. So we're going to have a good conversation today. We're going to talk about markets. We're going to talk about the Canadian side of things, some risks, some things to look out for. And I do want to talk to Kev about what he thinks guys my age, millennials, maybe some of you Zoomers out there taking a break from your TikTok dances. What should we do? What should we be looking at? What risks should we be aware of? But before we get started, as always, the sponsors, EasyDNS. Mark is a friend of mine. He's a friend of the show. And as a sponsor and a partner, his company, EasyDNS, has been indispensable. A couple of reasons. One, obviously, we run our website there, CanadianBitcoiners.com, where we very rarely post stuff because we're both busy. Sad but true. Other reason he's been a great sponsor is because he's got so many different things that can help you get whatever you're doing off the ground. So I talked about the website. You can either buy a website through Mark, buy a domain through Mark, or bring one over, port one. Easy to do, very cheap, very simple. Mark will help you with any of the roadblocks and speed bumps you might hit. There's not many, but you never know, these days. And then on top of that, you can do a ton of stuff that's sort of Bitcoin-centric or will appeal a lot to the Bitcoin crowd. Virtual private server stuff like Bitcoin nodes, Nostr relays, BTC pay servers. If you want to sell t-shirts, you want to sell hats, you want to sell pictures of your feet, whatever you want, man, sell them with Mark. I don't know if Mark endorses foot photos as far as sales, but you can ask him that when you talk to him. On top of that, if you use our promo code CBP Media, you get half of your first round of buys, 50% off. So load your cart, fill it, max it out, half off, and you really can't go wrong. There's not too many places you get half off these days. I think even Fortino's stopped giving half off on the day-old cookies, which I got to be honest, was not my favorite move on their part. Second sponsor, Bull Bitcoin. Bull Bitcoin is led by a team that is as extreme as you could ever hope for in all the right ways. These guys take no prisoners when it comes to the mission, when it comes to their focus, and when it comes to, I think, pushing Bitcoin as a medium of exchange, store of value, all these things. It's many things to many people. And whether you want to just buy and hold, which you have to do with Bull Bitcoin because it's non-custodial, no chance of being rugged by the exchange. Whether you want to buy and hold or you want to spend your Bitcoin, you can do it with Bull. And I'm not talking about spending on gift cards, though you can do that. You want to buy circ saw, concrete saw, maybe you want to put in a curb or something. I don't know. The city you live in will let you do that. I don't recommend trying, but you can buy all those things at Bull, or you can even pay stuff like your mortgage, your tuition, your credit card, your phone bill, you name it. Tons of different payees on bullbitcoin.com through the Bills platform. The promo code is in the description of the show, but chances are you already are a member or a client or a customer of Bull Bitcoin. Keep buying. Price is low. There's not too many other things to say about Bull that haven't been said about penicillin or the wheel at this point. Revolutionary. Okay. They're doing a great job over there. And then our last sponsor, Decentral Tech. They're new. We just started with these guys a little while ago. Jonathan's been on the show a few times. He's going to be on again in September. I just saw on the calendar. This is a place where you can buy a home miner that won't upset your wife. These are difficult things to do. Okay. Buying a home miner, they're loud. People talking about heating their house with them. You can do that if you want. They'll help you do that too. If you got to replace a board or fix a part or get something shipped in, whatever, they'll help you. But if you want to buy something a little smaller, if it's on the shelf, maybe behind me, might see something there in the next little while. A BitAxe, many different models, many different, power iterations in terms of the hashing that goes on when you plug it into the wall, all Wi-Fi enabled, easy to use, put brains on it, set it to whatever pool you want. It's easy to do. Decentral Tech. The link is not in the description because I forgot to put it in, but I will put it in at some point. And when I do, I expect you guys to be using that promo code as well. We're happy to be partnered with three great companies who want you to patronize them. Kevin Muir is here. Kev, I was talking to you before the show. What I didn't say is I've been a fan of yours for a long time. I like Market Huddle, and I got to tell you that I don't want the Kevin Muir who guest hosts, macro voices, two buttoned up. Okay. I want Kevin Muir, who co-hosts the Market Huddle today. I want swearing.
Good.
I want to be interrupted. I want all these things. My friend, how are you? It's great.
Good. Great to be on. By the way, with that intro, like I felt like I was on a CNBC Markets in Turmoil special. Well done.
Hey, thanks, buddy. You know, I've been working on that for some time. It's fun to do a podcast because you can kind of bring your own personality to it. And the sponsors we pick, the only thing I tell them is do not give me something to read. I won't do it. I'm happy to promote the product and buy the product myself, but I ain't reading. Okay, so Kev, people don't know that much about you on this show, I don't think. They may know you from the Market Huddle. They may know you from some other stuff you do. But for the people who don't, give them a little bit of background. Who are you? Tell me a bit about Kevin Muir.
So I'm an old guy, first of all, like much older than you. I've been interested and loved the markets from the time I was little, basically. I always loved playing games. My old man tells the stories of how I would bring Monopoly and all these games. I always wanted to play games, and what better game than the stock market? Nothing better. I fell in love with like a book called Market Wizards when I was a teenager. I read this thing. It's interview with a lot of the greatest futures traders out there, and I decided that this is what I wanted to do. I got a job actually while I was going to university at an Investor Line, which was a discount stock brokerage for Bank of Montreal. I started working nights. Next thing I know, I was working during the day. Next thing I know, I was in charge of the whole kind of group. And I was like 20 years old, and I was in charge, like I was a bank 5 level manager or something like that. And I was like, this isn't what I wanted to do. I don't want to work at a bank. And so I actually hadn't finished my degree, and I picked up and I moved to Chicago. Because I always wanted to work in the pits, like, you know, the Ferris Bueller with the eyes up in the hands up in the air. So I went there, and I hated it. I couldn't stand it. I got there, and it was just no real thought. It was just, you know, a bunch of huge, gruff guys, you know, in the smelly pit, screaming things out. And so I came home, and I was lucky enough to get a job at RBC, Dominion Securities, and I got a job doing what's known as program trading, electronic trading. And the reason that I got that job was my boss said there was guys that were better at trading, there was guys that were better at computers, but I had the right mix. So I was lucky to be there in the early 90s, and I was fortunate because it's a terrific place to work. It's cool. I don't know, for people who don't know, Royal Bank, the actual dealer itself is like the Goldman Sachs of Canada, very entrepreneurial. They let you run with it. I was like a 25-year-old or 27-year-old, and I was in charge of tons and tons of risk. And so I did that for many years until I was about 29. And then I decided that I was going to quit, and I was going to go off on my own and just trade for myself. And I've been doing that ever since. And along the way, I started writing a letter because I was kind of bored. It was kind of gets lonely when you're not having the same trading desk to sit on. And so I started this letter, and it ended up being a great way to meet people and interview people. And, you know, one of the things was the podcast. And, you know, you were very kind in mentioning that. My partner, Patrick Serezna, had me on Macro Voices, which is this really big top rated kind of macro podcast. And I hated it. It didn't do very well. And then he said, do you want to start one of ours? You know, something you and I. And I said, listen, if we're going to do it, the Americans do it so well, we have to have something different. We have to have like a gimmick, and we can't be too serious. And I said, what do you feel about drinking? And he was like, yeah. So we started drinking beers while we were doing it and having some fun. And it's been just a terrific ride because I've got to interview some absolutely fabulous guests in terms of some of my mentors. And like I mentioned, Market Wizards, I got to interview some of the Market Wizards, and the fellow who wrote the book was actually on the show. So it's been terrific.
There's some love for Market Wizards in the chat. I have to give you some kudos. The one thing I like about Market Huddle that I think is just not true for a lot of other shows is that even if I don't understand the content, which happens, I think on Market Huddle, I don't know, 30% of the time, maybe a little more, the interview, I still listen because I think that you guys do a good job. You specifically do a good job of making it accessible and bringing the guest down to a level where if you have a little bit of understanding of financial markets, you don't have to be the plumber, but as long as you know that water flows downhill, you can enjoy the interview. You know what I mean? I really appreciate that. No, it's my pleasure, Kev. So I recommend that show to everybody if you haven't started listening to it already. Now, I don't know where you want to start. And, you know, I had this kind of list of questions and notes and stuff, but, you know, I think you've kind of established yourself, at least on Market Huddle, as like the yen guy. Are you the yen guy, would you say? Is that a fair characterization?
Oh, that's just recently. Like yes, I have a big position. I love Japan. I think it's dirt cheap. I think there's lots of opportunities there, but no, you know, like if I guess one of the things about me is everyone always says, like, how do you make your money? You've traded for yourself for so many years. What do you specialize in? Like, are you a convertible bond trader? Are you an option trader? Are you, what do you do? And I always say, well, the reality is I do something different wherever the opportunities are. And I go to whatever I see. And one of the reasons I left the bank was I kept finding opportunities, and they're saying, like, I'd go put the position on in my inventory and they'd be like, you can't trade that. You're not allowed to trade that. I'd be like, oh, then I'd go find something else. They'd be like, you can't trade that. So at times I have these kind of strange positions, and they'll kind of move all over the place. And that's why the macro tourist itself is kind of, it's a tongue in cheek name. And someone once told me, he said, that the macro tourist, like, that's derogatory. And I said, oh, yeah, I know. Like I'm making fun of myself. Like I like it's not. It's a macro tourist is somebody who wanders into a square, doesn't know anything, makes a mess, and then leaves. And so I kind of laugh because I am the macro tourist. I go do a whole bunch of different things. So yes, over the last year or two, I've been doing a lot in Japan, but many years I do different stuff. Like I'll give one of the examples. I think it was in 2011 or whenever oil went down the first time, not the second time during COVID, but there was a time when it went down, and oil went down, and I got bullish oil, and I started thinking about, okay, how am I going to play this? And I went out and tried to look at buying futures. And the trouble about the futures were they were anticipating that the market would rebound. So like if the spot was $20, like, a year out was 25 or 30. So you'd have to, it'd have to rise that much for you to make money. So I said, oh, well, that's kind of like too much built in there. Maybe I should look at the equities. So I went and looked at the equities, and the trouble about the equities was the companies had lost so much money. They had all gone down in price, and they'd gone to a point where they were trading like call options on the actual commodity, meaning that they had all this embedded premium in them. And the reason they were trading in call options is because there was so much debt on these companies that the debt had actually gone down in value because people worried about their ability to pay it back. So I looked at this and I said, okay, I don't want to buy the equities because they're going to just, the moment this thing rebounds, they're going to have to issue a whole bunch of equity so that we can pay back this debt. But I looked at all this debt, and it was trading at 40, 50 cents on the dollar. So that year I was like a corporate bond trader. I was like, that's what I traded. And it was a great opportunity. And I think that's one of the benefits that I have is the ability to kind of look at something and go, okay, this is an opportunity for this particular set right now, and that's why I'm going to go do it. So yes, I love the yen. Yes, I love Japan. I'm more than happy to chat about it, but the reality is I am not Mr. Yen.
I don't want to ask too much about this, except is this whole carry trade 20 trillion coming our way? Is this something that I need to be like watching YouTube videos about, or should I just not care?
It's already over. You should have cared like 2 weeks ago when when everyone knew, So for those who don't know, Japan has very low interest rates. And for a long time, folks were borrowing in yen and then going and buying stuff. And not only that, the Japanese were doing it. And there was a whole bunch of different things. Like there's something called the NISA account, which in essence is kind of a Japanese RSP. Mm. And in the past, you're way too young to remember this, but when RSPs first came out, they were Canadian content only. Oh, like you couldn't buy American. You had to buy like TSX names.
Might be headed back there, by the way.
But yeah. Listen, it might not be the worst thing, but and then when they changed it, they opened it up. There's like this flood as everyone went out and bought American, companies. Well, that just happened in Japan this year, and so what you saw was a period when the yen and Mag 7 were deeply, deeply correlated. They seem to be moving tick for tick, and I speculated that this was the Japanese investors in essence selling yen to buy Mag 7. Mm-hmm. And that was part of the thing that was going on. And then you combine it with institutional traders that were borrowing in yen to buy Mexican pesos or some higher yielding currency. And you saw the yen go from 140 or 130 all the way to 160. It was in terms of yen, higher means that it's going lower. And when you went and talked to people, everyone was just like, oh, the yen only goes down. That's like literally people told me that. I was like, the yen only goes down. Even my co-host Patrick was giving me a hard time. He's like, you're just like an idiot. You're sitting here buying it. And I said, the reality is if you go look at what's called purchasing power parity, which is like you look at the fundamental value of the currency. Easiest way to think about it is like if you go the Big Mac index, go buy a Big Mac in
around the world,
Canada or Toronto, and then go buy it in Japan, see what, in terms of how much it is with your currency. Japan was dirt cheap. Like, I can't tell you how cheap it was. It was just like off the charts cheap. And so you knew that once this kind of went the other way, you were going to have a big move. And I think that the time to do it was a couple of weeks ago, and I have been long yen, but I sold all my yen yesterday. Like, I was like, that's it. I'm out for a little while. I think we're going to chop around here. The quote unquote easy money, not that it's ever easy, has been made. And I don't feel as strongly about it and stuff, but I do feel very strongly about the equities, and the equities got absolutely slammed. I think they're terrific long-term buy. Lots of reasons, but I think that they are going to be the market for the next decade.
Is there an example? I think the Nikkei, I might not be saying that right. Limit down, obviously Sunday, Monday morning, and then limit up yesterday.
Yeah.
You ever seen that before? That can't be.
Oh yeah. So I remember trading Japan when they had their tsunami.
Yeah.
And I remember I was long, and I came in, and then there's this tsunami. I started buying a little more, and then they said the prime minister is going to address the nation. And I was like, okay, the prime minister is going to settle everything down. He comes out in like a hazmat jumpsuit, and like it just went instantly limit down. And so yes, the Japanese, they are prone to being a little more all in, all out. So it's not that unusual that they had more violent moves like that.
We're going to talk a bit about communication strategy today. I don't think Jerome Powell is planning on coming out in a hazmat suit, though maybe in September. I don't know. Like, really, it's anyone's guess. We're in the Tyson zone, I like to say, where, the Tyson zone is where I could tell you anything is going to happen over the next month, the same way that I could have told you anything Monday morning in the 80s about what Tyson got up to on the weekend, and you'd have no choice but to believe it. I think we might be there in a lot of ways. And so I'm not ruling out the hazmat suit, but I hope it doesn't happen. Let's talk about the Fed. Let's talk about the states when we move to Canada. Federal Reserve, very keen on this messaging over the last, I guess 18 months at this point. They've been at 5 and change as a fund rate, as a policy rate. Inflation is cooling, but it's not cool enough. Economy is stable, maybe not strong, but not weakening either. And now you've seen this, I wouldn't call it a crash. We didn't really get this this move that would necessitate an emergency cut, although some pundits were calling for it yesterday morning. What is the Federal Reserve's sort of next best move here, Kev, in terms of rates, do you think? And maybe as a secondary question, should they be telegraphing more clearly what they plan on doing? I know that there's not really much debate about them cutting in September between the messaging and yesterday, but my understanding as sort of an outside observer is that there's value in expectation for these big economies and their central banks in terms of making sure that people are expecting cuts or expecting hikes or expecting whatever. What should they be doing in terms of communication? Are they on the right track now? Do you expect 50 in September, 25 in September? And maybe, if you want to talk a bit about the data they're looking at, one of my concerns, again, as an outside observer, is that I hear Jerome say a lot that he's a data dependent guy. And yet it seems like almost every quarter, the Department of Downward Revisions over there changes the data that he seems to be depending on when he goes to the podium. Am I missing something there? What's going on over there, man?
So you're correct that they definitely want to communicate. That question about whether communicating and pre-committing the Fed to a policy is good or bad is actually one that many kind of economists debate. There's a lot of debate about it. And just to kind of remind you, back before Greenspan, they used to go and they used to just change the rate and that'd be it. And not only that, when I first started in the 90s, I remember you didn't even get an announcement. You had to figure out that they changed the rates by going and looking at their open market operations in the T-bill market. So that was it. They just went out and they were just, okay, they changed it. Most economists, I'll give you the kind of the argument that they'll tell you is that they believe that by the Fed communicating clearly what they're going to do in terms of ahead of time, and not only that, what their reaction function. You'll hear them when you listen to them. They'll talk about the reaction function. Teaching the market about the reaction function helps the economy. Now, I'm not so sure I agree. And interestingly enough, when Poloz was the Bank of Canada governor, he was one of the few governors, central bank governors, that actually surprised the market. Meaning that if you go look at history for the Federal Reserve, every meeting, when you look at what the market is priced in, it'll be at like 95%, meaning that the market has already priced this in, and they go and they do it. Poloz left it at 50-50 and then, or even 40-60, and then surprised everyone and went the way they didn't think he would go. And his argument was that, you need to have some uncertainty in there. By creating too much certainty, you encourage people to take excess risk. And to that point of view, I happen to agree more with Poloz than I do with the new age economists. But listen, they'll tell you very definitely, they can prove to you that it is beneficial. I disagree. But all you have to do is look at what happened in the post-COVID world when the Fed got out there and said, we expect interest rates to be low for a considerable point of time. And then people like all the regional banks, Silicon Valley Bank, went out and bought bonds and levered up their balance sheet because they had taken what the Federal Reserve had said, which was really just an opinion as opposed to a promise, to heart. And then they ended up getting crushed. So I think you'd be actually better off communicating less and letting there be risk out the curve. Like right now, the curve is inverted, meaning that as you go out in terms of tenor, longer bonds are trading with a yield that is lower than the front month. That's because the market is expecting the economy to roll over. But it also could be a function of this communication policy and their change of how they're doing things, and the fact that people understand that there isn't that sort of risk anymore because the Fed's kind of guided you. Now, in terms of the revisions, there's no doubt recently there's been a lot of revisions downward. One of the things that you should always remember is that when you're looking at an economy, the revisions actually give a good clue about whether the economy is strong or weak. And all you have to do is look back during 2021 or 2022. There's lots of revisions higher after the fact. So that's one of the clues that people look at. I happen to believe that the economy is actually much weaker than the Fed believes. I think that they're late and that they should have been cutting before. But at the same time, it's going to appear a little paradoxical what I said. I don't think it matters as much as people think it does. Everyone's all up in arms because he didn't cut this time. The reality was he's not going to cut. And then even more importantly, you asked me a question and you asked me kind of what I thought they should do. And that's irrelevant. Like, we shouldn't care what we would do. We should care what they're going to do. So I spend a lot of time just getting frustrated with traders or strategists that start talking about what should be done, best policy. Like, are you an economist or are you a trader? Because if you're a trader, it doesn't matter what you think should be done. Like, you could say, I think interest rate should be 2%. Who cares? All that matters is what will be done. So I say, don't worry about what should be done. Worry about what will be done. So on that basis, here's what I believe will be done when it comes to the Federal Reserve policy. A lot of people are talking about 50, 75 emergency cuts. That is not going to happen. Like Jeremy Siegel, very well regarded professor, was on CNBC talking about an emergency 75 cut. It's embarrassing. Like, that is embarrassing. He should be embarrassed. He should go home and think about what he has done. Like, he really should. At that point, the NASDAQ was still up on the year and he was all freaked out about this. Anyway, so back to what I think the Fed will do. This Fed is very consensus driven. It is not one to do anything too dramatic. You might say he did 50s and 75s on the way up. There was a lot of inflation. He was slow to get there. He's going to be slow on the way down. I suspect that he won't even do 50s. People are talking about him cutting at 50. I suspect what he's going to do is he's going to put the economy or the monetary policy on a path of 25 basis points a meeting, just like Greenspan did on the way up in the post-dot-com bubble world. In 2002, he started raising 25 basis points each and every meeting. And I think he went on for 2 years like that. Every meeting was just 25 basis points, 25 basis points. I think that Powell is going to go do the same in reverse. So he's going to start you off. He's going to say, we're going to do 25, and then we're going to look. And as long as the numbers keep coming in weaker, he's going to do 25 and then look, 25 and then look. So then the question becomes, is he going too slow for what the market expects? And does the market freak out and actually have a kind of a crisis that pushes him to do more? Because ultimately, I think that will be the only thing that could push him to do more is a problems in the financial markets.
Lot to digest there. Do you think that the expectation that leads to additional risk being in the system is actually just driven by the expectation that governments, regardless of stripe, will stimulate and give you bailouts and do all this other stuff on the fiscal side, and is not necessarily tied to monetary policy guidance and expectations anymore?
Okay, that's a good question.
Because that's something we think about in Bitcoin a lot, right? Like the printer go burr,
Yeah.
I'll sit in whatever Mag 7 equities, whatever high beta Bitcoin related stocks and Bitcoin itself, knowing that at some point the pain will be too great. The election is coming, and that the natural slant of that government and every other modern government is to fire up the burr machine. It seems to be the case now. It's the expectation of the people. And at some point that's going to rule the day, I think. What do you think?
Okay. So unfortunately, to answer that question, we're going to have to talk about fiscal and monetary policy.
Sure.
And there's a big difference. So I have seen the printer go burr argument, and I've seen people say that they were buying. You got to buy every dip, because the reality is at the first sign of trouble, they're gonna cut, and printer gonna do burr. I can tell you that's not going to be the first sign of trouble.
Okay.
It's going to be some real pain before they do it. All you have to do is go back and think to 2018. Bernanke came in there. He started raising rates. He raised rates until we had that Christmas massacre where the stock market went no bid. And then sure enough, he did go and reverse policy. So I'm not disagreeing that ultimately that is the way it is headed, and that ultimately that is the decision governments will make. I will not disagree, but I will push back to this belief that means you can lever it up as much as you want, because I think people underestimate the amount of pain it causes them to go and to stimulate. Now, in terms of this different kinds of stimulation, that sounds bad. There's fiscal and there's monetary. And I happen to believe that fiscal is so much more powerful than monetary. And so when I hear people say they're going to print their way out of it, and they're all mad at Jay Powell, I don't think Jay Powell is as important as everyone thinks he is. I actually think that the reason the economy and that we made inflation was because of fiscal policy as opposed to monetary policy. And it's much different. And let me just explain to you why I believe this. So if you think about QE is quantitative easing, and it basically means the monetary authorities expand their balance sheet by a certain amount, a certain quantity. Mm-hmm. So they go and they say, we're going to buy $10 billion of whatever. Okay. And it's usually, it was originally T-bills. It eventually became bonds. And even in the COVID crisis, it morphed into corporate bonds. In Japan, they've gone as far as buying equities. Yep. So it's the central bank expanding their balance sheet by buying an asset. Now, depending on the asset they buy, but let's just first of all start with T-bills. If they go and they start buying all sorts of T-bills and they push money into the system, the idea used to be that you would go and the economy would, all of a sudden the banks would have all this cash on their balance sheet and they would lend it out. And that was really the idea. And so when they first did quantitative easing in the post-Great Financial Crisis world, there was some very serious economists who wrote an open op-ed to Bernanke saying that he was going to cause a collapse in the dollar, a runaway inflation, because he was doing all this QE. And the reality is we had one of the most, crappy, shitty recoveries in history. even though we had this extraordinary amount of quantitative easing. And the reason is, if you're Jamie Dimon running JP Morgan and the Federal Reserve comes and buys $100 billion of bonds off of you, because they're the ones selling it to them, you all of a sudden have $100 billion on your sheets. You don't go and say, well, you know what? I'm going to give Kevin a loan. I'm going to give Joey a loan. I'm going to go give all these guys a loan. The reality is that they were never constrained by the amount of money on their sheets. JP Morgan could always go make those loans whenever they wanted to. So that actual quantitative easing operation did nothing to change the actual real economic desire for loans and money creation. And this is the part that everyone kind of confuses. And in essence, what happened is it just sits on the bank's balance sheets. And that's why we needed the reverse repo program, because there was so much money on the bank's balance sheet. They were losing what's called the lower end of the range. In essence, they couldn't keep the interest rate as high as they wanted to. So therefore they needed to do reverse repos, which is just the Federal Reserve issuing T-bills.
Yeah. That's overnight loans, right?
So one of the things is, one of the things that you kind of remember is there's a big difference between QE and fiscal. And the reason that it worked so well, why we had inflation, was because this time we didn't just do QE. We did QE, but we also did a massive amount of fiscal. And all you have to do is look at the economy that did the best is the US. And it's no surprise that they did the most amount of fiscal. They did 24% of their GDP. They just shoved out the door as fiscal stimulus. Canada, we were at 16. I think the next highest was 19. America was off the charts. And so everyone's sitting there going, America clean his dirty shirt and all this crap, like this shit that I can't stand. And I'm like, no, the reason they're doing so well is because they had so much fiscal. And so now when you talk about the Fed put, I don't think the Fed put is as important now as the fiscal put. And so you have to ask yourself, are the next time we run into trouble, will the government just spend like that again? I happen to think it's yes, but I don't think it's as quick as everyone thinks it is.
I don't know what real pain looks like anymore. And I think that there's a number of people who were maybe coming of age during the GFC, myself included. I was 21, I think in 08, 09. Yeah, 21, 22. You know, I don't know what that looks like. I wasn't handling my own finances. I didn't own a home with a variable rate mortgage, any of these things, right? That really do tell you, you know, is the stove too hot for you to put your hand on it in terms of whether or not you're levering up and trying to buy equities or Bitcoin or whatever else. And so I wonder if what you consider to be real pain is actually below the threshold that will trigger a response. There's no good answer for that.
So
I really don't know.
You're saying that because we've become so immune, like so intolerant of pain, it's going to be
so
faster than I'm expecting?
Yeah.
Could be. I would say, though, there's a lot of old guys still running governments, unfortunately.
You got that right. You got that right. Let's move to north of the border here.
Okay.
Our home and native land, all our sons command, or whatever the lyrics are this week. I've heard you talk about Tiff Macklem in terms that I would characterize as less than glowing, probably pretty soft, actually. That
I think he's one of the worst central bankers.
Yeah, okay. Yeah, that's what you like to say.
Not for what people think. Like, you know, the reality is, I think he's been too tight.
Yeah. Okay.
And I know, like, that's kind of against what everyone's saying. Ultimately, here's what I think happened. America went and did the greatest amount of fiscal stimulus. Everyone underestimated how efficient that was going to be. Not efficient, how powerful that would be in terms of running their economy hot. We did some, so our economy ran hot as well. But you have to remember, there's two different ways that you can go and create money. One is that the private sector borrows it into existence. Meaning, Joe, you go borrow from Royal Bank to buy a house. That's actually a loan being created. That's the money side supply being increased, right? And so generally in the past, because we've had no fiscal stimulus and everything has been monetary. Like, if you think about since the Great Volcker in 1982, every single time that we ran into trouble, what did governments do? They lowered interest rates to try to get the private sector to borrow more.
Yeah.
right? And so in essence, what we did was we created this environment where every time they had to put rates to a lower level to induce new people to borrow. And so we made more and more debt in terms of in the private sector's hands, especially in America. It hit this point where it was absolutely crazy. GFC comes, they go to zero. Nobody wants to borrow. That's called a balance sheet recession.
Hmm.
Okay. Then they do all this crazy quantitative easing stuff that still doesn't really work. Okay. So that's the one way you can create money. The other way is for government to spend it into existence. And that is in essence fiscal spend, like deficits, and right. And so US did way more than we did as Canadians. They did more. But not only that, their private sector, their consumer sector, they have this thing called the 30-year mortgage, right? So everyone that could refinanced their houses at like some stupid level, 1-2%. And what in essence occurred is that they had no consumer when Powell started raising rates, it had less effect than it did in the past because everyone that was, previously that affected the ability to people buy houses, they'd all locked it in, right? So we didn't have that. Ours is like, like most people do 5 if they do 5 at all.
Yeah.
We don't have the ability to lock it in. So we were more exposed to interest rates. Number 2 is after the GFC, the US was at like 110% of consumer debt to GDP. They paid it back. That's another reason their economy was so bad in the post GFC world. They reduced it. They went from 110 down to 75 or something like that. We did the opposite. We were like, yeah, we're so smart. And we just started, buying more and more. So we're actually higher in terms of debt, consumer debt to GDP than the Americans were at the top of their peak. So we have more debt to GDP. We have more exposure in terms of it floating. And we did less fiscal spending on the government side. And then Tiff is thinking that he's the man and he's going to go, toe to toe with Powell and raise just as much. And the kind of the really pisser thing about it is for a while, it looked like he was right. And the reason that it seemed like he was right was because at the same time that he was raising rates, our government was doing an absolutely insane immigration policy. And Ben Rabideau is, a real estate expert, and he's the one who really opened my eyes to this. And he's actually testified in front of the government and some committees and stuff. And he showed me like how much we're doing. And listen, I'm the half of my side of my family is like was an immigrant in terms of my mom. She was not born here. I love immigrants. I think they're great. But by doing too many, we're not doing ourselves or the immigrants that we're bringing into our, society any favors, because
Amen.
The reality is that we couldn't house them. We don't have hospitals for them. Everything is just like a shit show. So, but one of the things about it is when you bring all these people in, it makes your GDP look larger. And so one of the things that Tiff was missing was that our GDP was going up, and it was going up because we had the greatest immigration boom that we've had. And if you look at a graph of Canada's population growth, this was like way more than the baby booms. Like this was off the charts growth in terms of how many people. So it made our economy look better, but yet we were having what's called a per capita GDP recession.
Yep.
And so we might have had like the second best GDP growth out of the G7, but we had the worst. We actually lost value in per GDP per capita. So that's why it's felt so bad in Canada. Why kind of you be like, hey, it says we're not in a recession, but it sure feels like a recession. And the reality is it is a recession for most people.
Do you think it's actually fair to characterize that whole, he didn't realize the immigration policy was driving up GDP as he didn't know? Like, I think we're in the 8th straight quarter of that GDP per capita decline. And when I think about all the data that Macklem and Rogers purport to be reading and digesting and metabolizing every month when they decide whether or not they're going to cut rates, it's hard for me to believe that they didn't see that and didn't know it. Not only that, but I happen to know that at least one other major Canadian podcast that talks about that all the time got an audience request from Mark Miller, the Minister of Immigration. So, I happen to know that there's at least one or two ministers spending their time trying to get podcasters to carry water for them instead of maybe looking at data or accepting that the data is going against them. Do you really think that he didn't know, or do you think that there's actually not this sort of arm's length distance between policy and politics when it comes to the Bank of Canada?
So if you think about what I'm saying that he was actually too tight.
Yeah.
He actually kept rates too tight, and I think he had to be loosening them way ahead of time.
Mhm.
So imagine the shit he would have taken if a year ago he started talking about, oh, you know what? It's actually worse than it seems. It's just because of all this population immigration.
Yeah.
And I'm actually going to go lower rates to 3%. And you talk about like this perception of the printer go burr. And I'm sitting here telling you that he actually needed to do that. Imagine the pushback he would have got. Imagine what people would be saying. So he really didn't have a choice.
Who would push back? I think if you frame that, especially because now, if I look at the sort of broader zeitgeist here in Canada, I know for people my age, it sounds like for people your age, everyone understands what the problem is and can describe it, fairly well. The pushback he would have gotten maybe would have been significant at the time, but now,
well,
as you pointed out, like he would have been correct to start this earlier because of the reasons you described.
Okay, but if you think about, let's just go back to my yen trade. I sat there, I was offside for a long time. I got told I was an idiot. I was an idiot. All of a sudden it comes, it falls, 20 handles in 3 days. And they're like, hey, you're not such an idiot. But the point is, like, you got to be willing to take that you're an idiot. And these guys aren't. So I don't know if he would be even allowed to take that, because don't forget, he is obligated with running policy based upon inflation.
Yeah.
And the truth of the matter was inflation was above target. Now, I happen to think that his raising rates did very little to change inflation. And that's ultimately where I differ from a lot of people, is that I think that if you really wanted to change inflation, let's just take America. It's easier to understand because it's kind of cleaner. Everyone was talking about the Federal Reserve raising rates. I think instead of the Federal Reserve raising rates, they should have been spending less, the government, because that was the problem. There was too much money being spent out into the system. Now, the other problem is there was too little money spent into the system during the GFC.
Mm-hmm.
And that is why interest rates were so low and why they kept trying to stimulate through interest rates, and yet nothing happened. Because if you think about it, think about like if you're and I like using Europe, because Europe went to negative rates. So you could go borrow and to buy a house, and your mortgage was going down on its own, if I got that right. Yeah, I think that's right. It's crazy. Like it's madness. So let's just think about if you're like a company that makes widgets, and you're sitting there somewhere in Europe, you're in Spain, and all of a sudden you can borrow 10 years at zero. You think, okay, great, that's free money. I should build a plant. I should do all this stuff. The reality is, if there's nobody to buy your widgets, the zero is not it's not your decision. That's not the factor that's mattering. Mm-hmm. It's the demand that matters. And when you look at it, you'll actually see that when you go talk to CFOs that are making those decisions, the cost of funds is not as important as everyone thinks. And this is the thing that pisses me off, is that everyone thinks, oh, I can just lower rates and change behavior. No, it's actually you can't. And ultimately, the government spending money into existence when it needs to be spent is actually more important. And that is the problem with the GFC. They just kept trying to lower rates, thinking that they would induce somebody to spend, and there was nobody to spend because there's no demand.
I can't believe you called Tiff Macklem's testicular fortitude into question just there. That is hard for me to believe, That is really something, Kev. I can't.
Listen, he seems like a decent enough guy. I don't want to be too harsh on him, but I really, truly believe that if he was more forward looking, he would have got out ahead of it. And I think he was too scared, because at the time inflation was going fast. And not only that, America was especially going fast. And it seemed like you had to, we can't decouple as much as we think we can. And I would have done it. I would have taken it, but he just was not going to take it. So I understand why he did what he did.
Do you think it's a reasonable characterization to put something like, ballooning public sector employment under the same umbrella as government spending for crises? I look at the sort of these charts, damn near hockey sticks, honestly, since the beginning of COVID in terms of like, I don't know, federal public service is a good one, but there's others as well. Some municipal public services, provincial employees, basically people who are being paid by the public coffer, has ripped to the upside in a time where the economy has been, by some characters in some people's opinion, broadly weakening or weak. Is it a fair sort of description to say that that's also fiscal,
Sure.
support? Is it? Yeah.
It's one and the same. But the problem I have is that I hate absolutists. I hate like people that say this is absolutely bad, absolutely good. And the reality is that almost everything, there's a middle ground that kind of is where the truth lies. So let's just think about what happened after World War II. All these GIs come back to the US. There's no jobs for them. So what does Eisenhower do? He says, okay, well, we got to put these people to work. We're going to make the greatest interstate highway system in the world.
Mm-hmm.
And he went and did that. And he spent money on that. And federally employed workers exploded. But yet that was a good thing. Like that ended up being some of the part of the reason the US outperformed for the next 20, 30 years was because they had invested in that. So one of my worries is that when you go and you focus on just getting deficits down, you're missing whether it's an investment or it's just money wasted. So think about your company here, the Bitcoiner, Canadian Bitcoiners podcast. You guys get some money from all your sponsors, your numerous sponsors, CNBC, and everyone's knocking on the door. And you have all this money, and you could decide to have a party, and you can go and you can blow it all in an evening with free booze and have a great time, or you can invest in some new equipment. You can buy, you can get another staff that helps you out doing stuff and making the podcast better. And this is one of my issues: is that too often people just either they say like deficits are bad, deficits are good, like they don't differentiate. Like, although I do lean kind of more on the deficits aren't as bad as everyone thinks, the Paul Krugman, like who argued you could literally pay someone to dig a ditch and then fill it in, that's wasted. And that's a problem. But at the same time, all I have to do is go look at the Ontario government. They had this mad desire to show that we're getting the budgets in control. And it was I can't remember which government it was, but it was one of the governments. They had promised that they'd get the budgets in control. So what did they do? They sold the 407 highway. And so for those who don't know, this is a highway that runs north of Toronto. It's probably, I think, one of the most expensive highways in the world.
Do you know what it costs to take it at length, Kev? It's like $70, I think, during rush hour now.
Yeah.
Take it one way.
And in the private sector guys are saying, thank you very much. You sold this for a heart, like for a song. And it was a case of the government being so focused on trying to balance stuff and get their deficits down that they gave this away. So money spent on infrastructure or making our society better is a good thing. Money wasted, and I'll be the first to say that I think America was crazy for mailing everyone checks. Like I have a guy who sat beside me. He has he's my age. He's he's a little older than me, and he's got some kids that are he's an American, and he had some kids, and they were just getting mailed checks for $2,000. We wondered why GameStop was ripping. These guys were literally just getting no, honestly. And it wasn't even just one check. It was 3 checks.
Yeah.
And so that money, listen, did some people need it during COVID? 100%. But you should have means tested that. There was no reason to send him the money. He didn't need it. It was just money wasted. And so anyways, I have a real problem with just saying, oh, ballooning or increasing government jobs is bad. It might be, it might not be.
How concerned should we be as Canadians with a weakening dollar? I've heard you call for, CAD USD all-time lows, in the next year. I don't know exactly the time frame you've mentioned on the huddle, but you know, as a younger Canadian, one of my concerns is that we don't produce anything here. Everything is imported. Increasingly, we don't even produce energy here, which is alarming for a number of other reasons besides the currency thing. But one of the things I think about is if the currency is weak, everything's going to start costing me a lot more money because we
Yep.
seem to be unwilling to produce it here. And as you mentioned there, the government spending we're doing doesn't seem to be productive government spending in the most technical sense. Not necessarily people not doing hard work. I'm not saying that, but things that you need to run a modern economy are not being made in Canada, let's say. Is that a fair fear for someone my age and even someone your age, I guess, especially if you're on fixed income? You really need the dollar to maintain some equilibrium between strength and weakness if we're going to continue to be net importers of basically everything that drives quality of life. Where do you come down on that?
So you're correct. So but I'm gonna push back a little bit on this. Like we don't do anything right.
Okay.
If you actually go look at, for example, tech, there's a lot of things that we're doing much better. Like the Mayor Tory was a great champion of getting tech into Toronto. And if you look at the greatest expansion of tech employees in North America, I think we were number 2 behind Silicon Valley. We beat out like Texas. We beat out New York City. We've had a huge amount of people. For example, we went and did this thing with the H-1B visas in terms of America had this thing where you were trying to, if you were there on an H-1B visa, which is like some sort of visa that they get like people with certain skills in, and you wanted to, you could just come to Canada and work and we would just take you. And like, that was like a genius move because the reality is these people are super productive. We could use these people. So it's not like we're not doing anything right. Like they're like, yes, a lot of the things you highlighted are correct. But as a true Canadian, we just kind of like, you've highlighted all the things that we're bad at, like, and I get it. I understand, but I just want to kind of say there's some things we do well. There is, and there's a lot of things we could do better. Now, in terms of my call about the Canadian dollar, if you said to me, where do I think Canada, the Canadian dollar will be 20 years from now? I think it's going to be higher and we're going to do better than America. So you need to be careful in terms of my trading opinion versus my long-term allocation of capital and whether I'd be worried about it. Like if I was allocating capital that I could not touch for 20 years, I think I would probably be more likely to leave a higher proportion in Canada than the US.
Wow. Okay.
Yeah, I don't think it's as bad as everyone thinks. And I think that the US is an expensive economy that or at least market, and that everything is priced for perfection. And the reality is everyone's overweight there. And it's going to be difficult over a long, long period for the US to continue to outperform. Now, having said that, going back to my thing about Tiff Macklin being the wrong, disaster, he's going to be forced to do this. And the reality is a recession is probably inevitable. And it's probably going to be worse than everyone thinks. And we should have never let our housing get to this point. It's been a disaster. We have so much debt. And one of the things is that the easiest way to solve your problem when you have a problem with an asset that's going down is to just kind of inflate your way out. And that's in essence what you're going to do. The Canadian dollar will be the outlet for the housing correction. So ultimately, I'm probably not as bearish as some people are about Canadian housing, because I suspect what'll happen is they'll just skate themselves on side by letting the dollar go.
Kev, you've imparted so much wisdom here in the last 50 or so minutes. No one gives a shit about any of it on this show. I want to talk about Bitcoin.
Great. Here we go.
You guys call it. We got like 5 minutes left. You guys call it on the Market Huddle the asset that shall not be named. I love that. I got to say. Okay. I think that's great. I think that's more your listeners telling you not to call it Bitcoin, not to talk about Bitcoin, than it is you guys. You can tell me if I'm wrong. Now, Kev, you are, in your words, I got to find the email you sent me. I don't have it up. I think you call yourself a coin skeptic.
Yeah.
Bitcoin skeptic. Let's hear it. Lay it out for me, man.
Okay. So the reason we call it the asset that shall not be named is because I think we said something bad about it once, and the friggin' hate mail that we got was just like out the roof. So we were like, oh, this is obviously not smart. Now, you're gonna realize I am a trader, and I might have positions that move around, and to me, none of this is personal. Like, I don't care. One of the things is I sat on an institutional trading desk. I saw people that I was trading against. I realized I need someone on the other side of my trade. Otherwise, you can't trade. So the first thing I just want everyone to understand is if everyone believed that Bitcoin was the be all and end all and they all owned it, it would be over. The trade would be over. So the fact that there's still skeptics out there like me is actually the greatest thing ever. The second thing is, the moment you convince me to buy it, you should sell it, because as the skeptic, you know that that'll be the end of the move, right? Now, let me tell you about Bitcoin, and I'm going to just show you how stupid I am. And just so that when I tell you why I don't like Bitcoin, you're like, oh no, that guy's an idiot. And you understand why. So I actually got told, so I ran my own little shop, me and another guy, and then we hired this computer programmer out of school. Really smart guy. And he's sitting there and he tells me, comes up to me, goes, there's this thing called Bitcoin. And he starts telling me about it. And I look at him and I say, like, what's the price? And he says $5. And I go, $5. I'm like, that is the stupidest thing I've ever heard. And if you ever mention it again, you're fired. So then he comes back a month later. He goes, that thing you told me was the stupidest thing in the world? He said, it's $50. Like, this is how long ago this was, like $50.
Long time.
And I'm at least smart enough to know, well, if it's $50, maybe it could be 500. Maybe it could be 5,000. What the heck do I know? So I go, okay, let's start. Obviously, this is not the dumbest thing in the world. Let's start doing it. So we started trading it. One of the things that I had done is interlisted ARB. So I was very, between US and Canada. I had made systems and programmed systems to do it. So it was very easy for us to arb between like the different exchanges. We made up something like that. We also started mining. We own these butterfly machines because I couldn't bring myself to actually buy any. I'm like, oh no, we're not going to buy any. We'll just mine them all and trade.
Kevin Muir, the Bitcoin miner. Oh yeah, my God.
We had our office got so hot, we had to move them into our garage because we had like just racks of these butterfly machines. Anyway, so we do this and we did really well. Like, it was a great trade. And this was like from, I don't know, you can go look at your chart. It was from 50 to, I think it went to 2000.
That's going to be 2013, 2014-ish probably.
Yeah. Then it collapsed, and people forget this. Like, it collapsed and it went to $200 and it sat there for a couple of years. And so at $200, our machines were all worthless. Like, we were just like, so I was like, okay, great. We had a great run. That's it. We'll hang up the sheets, so like hang up the skates. And so we got rid of it all. And I'll tell you, I do have some issues with Bitcoin. And then the kid comes to me later and he says, all your issues with Bitcoin. He goes, I think I found something that is like addresses a lot of them. Because like my issues were like, this is actually hard to get a private account. Everyone thinks that they have, an asset that's not anyone's, liability. But the reality is most people just hold it in an exchange, and you have exchange risk, and there's all sorts of issues. And like actually getting the ability to transact it, especially back then, it was very difficult.
Oh yeah.
He goes, so I think I figured out like there's something that will address all this. It's something called Ethereum.
No.
So he told me, I think it was a penny. And I told him, I said, listen, I'm not going to buy any. I can't buy any of this. But you should buy some. And I told him, you should buy $5,000. Just take $5,000 and buy it. And if he'd done it, like I'd be working for him. He didn't do it. He was having a kid. He didn't have time. He didn't do it. Ultimately, so that's what an idiot I am. Okay. I'm the idiot that knew about Bitcoin at $5, mined it, and just did all this stuff. And then I was the idiot that knew about Ethereum at 1 cent. But let me tell you why I have issues with it and kind of my evolution on it. And again, if you're, please don't send me anything telling me you haven't thought about this. You haven't done, like, I get it. I've listened to a lot of it. I've really thought long and hard about it. You're not going to convince me. And not only that, for your own sake, if you convince me, it's going to be a problem for yourselves because it'll be the top. But I'll tell you what my issues were with it. For a while, I was on this kind of, everyone says the supply is limited, but the amount of total Bitcoin, or sorry, the total crypto that you can make is infinite.
Sure.
So I was kind of like, it's infinite. This thing you can just create as much as you want, in terms of making a new coin and stuff like that. I didn't appreciate at the time Michael Saylor's argument that no, you need the one and the only, the Bitcoin and the network effect. So I think it's kind of funny because if you remember back 5 years ago, maybe even longer, there was a whole bunch of very prestigious kind of finance dudes saying, I don't like Bitcoin, but I think the technology is interesting.
The best. Those guys are the best.
And there's the biggest douchebags around because they basically didn't want to be long it, but wanted to show they were into the technology. Okay. And Michael Saylor's like, screw that. Like, it's basically the reason it exists is because of the network effect. So I think Saylor is in that way a complete and utter genius. He understood that. He understood that this was kind of the one and the only. And if you actually had the other ones doing well, it would actually be negative for Bitcoin.
Yes.
Right? Like, I think it would be negative for crypto in general because it would increase the supply. So I probably misunderstood that. And Saylor's he's quite a piece of work, but I got to give him credit for I think he understood that better than most people did because a lot of people had other assets. Like, there's like, pick your favorite finance guy that was buying tattooing shit on their arm.
Yeah. Novogratz. Yeah.
Like, there's just, anyways, crazy stuff. Okay. So ultimately this is what it comes down to for me in terms of why I have issues with it. Because people say you own gold. If you own gold, why can't you own Bitcoin? Isn't Bitcoin just the young person's gold? And I'm going to tell you why I think it's not. And again, please do not send me anything.
no one email.
I know. I am giving you my opinion. You should just be happy I don't own any of your thing because it means it's going to still go up. Everyone says it's crypto. Bitcoin is nobody's liability. And this is ultimately what I think is the issue with it, is that it is someone's liability. Yeah. And who that someone is the network. And this is ultimately what I'm worried about, is that people that own crypto or Bitcoin in general have an asset, first of all, that is a legitimate competition to the government, right? Like I hear, like, it could be money.
I freely admit that. Yeah, I freely admit that.
It's in competition with the government. First of all, I'm always nervous being long something that is not in the government's best interest for it to do well. Okay. And just so you know, by the way, I'm going to tell you one quick story. Do you have a hard break? Do we have to go?
No.
Oh, okay.
It's all your time, Kev. I do it for the guests, but if you want to keep going, I'm
okay.
Good.
So I'm going to give you one quick story about like when I used to talk about something, like I actually got lucky and I timed a negative crypto piece that I wrote properly. Like I on the last time it went up here, it went from 60 back down to 30 or something, or there's a move.
The FTX,
and I actually, I was quite negative, and that was kind of a trading call, and I got it right. And so I was on Twitter, and somehow it got out that this is happening, and the mob came after me, right? and I was kind of like, when they come after me, I'm like, oh, you know what? Like, you think I'm stupid about this trade? You haven't heard the half of it. I'm the idiot that, passed up on Ethereum at 1 cent. Like, I have no desire to argue with anyone about it. Like, zero. If you want to listen to my opinion, listen to my opinion. But if you want to like argue about it, I have zero desire. So most people, when they hear that, they realize there's no sense arguing with me. But there was a couple that just kept coming after me. And I was like, what's going on? Like, this Twitter account just won't, like, every day. It's like they get up and they're doing this and doing it. And eventually I kind of look, and it's like Susie from Oklahoma and like Dave from Nebraska. And I go look, and I go through their accounts, and I go looking through all their tweets, looking at what they're doing and stuff like that. And I go back and I go back and I go back till I find when they started it. And there's a couple of Russian tweets. And I'm like, these aren't Dave from this isn't mid-America, guys. These are Russian bots.
Okay.
Right. So the first thing I'll say is that Russia, China, part of the reason that they aggressively marketed it is because they realize it is competition to the US dollar.
I think that's a fair criticism.
Yeah. So it is. So just be aware you are owning something that might or might not be something the government eventually won't like.
Yep.
Okay. And I'm not saying like, listen, Trump gets in there and he's convinced the all in tech bros to get it all in it. It might be the greatest thing in the world, but there is a potential that the government says, hey, wait, we are the issuer of money. And by taking that away from us, it's actually a threat to us and we're going to outlaw it. And before you say you can't do that, just remember that in the 1930s, they outlawed gold.
That's right. Door to door if they had to, right? Yeah.
Right. So now, just be aware of that. Now, the real reason what I worry about is that you say, well, it's nobody's liability. Like I own this. You can't take this away from me. And I'm like, do you really think that the internet is that like, who do you think controls the internet?
This is it's an interesting point. It's an interesting point.
Like the reality is that the internet goes on 7 big there's like 7 big routers or something like that controls the whole internet. And have you ever thought about like, when you think about what happens if China invades Taiwan, which I don't think is going to happen. Like, just so I'm saying this correctly, I am not a big China's going to invade Taiwan guy, but there's lots of people who say it will. And then all of a sudden we go to war with China. And they go and do you think that the internet is going to continue to go between the two of us?
It's not going to look the way it does now, for sure. I'll give you that.
Well, I think they're going to just shut it off, then it's going to fork.
Yeah.
And so you're going to have half of your assets. Like, do I own this or do I not own this? And then the reality is that the government goes and controls the internet.
Okay, I hear you.
So that's ultimately my point. Is like if you own gold. And you own it, and I get it. If you buy gold on an ETF, you don't really own gold. It's not the same as owning it, like in your person. But gold is truly something that if you own it physically, it is nobody's liability. Zero.
Yeah. Agreed.
You don't need anybody else.
I agree with that. I'm Italian, Kev. Like I love gold. It's in my DNA. There's 2 things I can't avoid: a nice gold chain and putting a shovel in a wheelbarrow of cement. Right? I can't avoid these things. And so no matter how much I like Bitcoin, I'm always going to be a fan of those things. The thing I would say about the internet argument, I hear this a lot, and I think it's a fair. Don't get me wrong; it is a fair criticism. Some of my colleagues in Bitcoin, I think my co-host would even be in this camp, would say that. Doesn't matter if you shut down the internet in some places, the network will keep running. Maybe not. I don't know. I don't have a strong feeling about that. Much like you, I think there's the potential that happens if things really go sideways. My base case for Bitcoin has always been the same. That if the worst thing, like if the only way Bitcoin stops is the last signpost before I'm killing my neighbors for food, then I'm okay with that. Like I think that's a decent investing thesis. If it takes that much to shut it down, I'm good. The thing that gives me pause and has always given me pause about Bitcoin is this bit about the threat to the state. The Leviathan does not take kindly to someone chipping away at its foundations, right? No matter how much I think the foundation is built on sand, and I do, they're still not going to like me out there with a pickaxe, no matter what the size of the pickaxe is. And 10 years ago at $1, $5, it was just a couple of guys, Shawshank Redemption with the ice cream spoon digging into the wall. Now there's a guy with a fucking front loader at the gates. Yep. And like, I worry that at some point, someone is going to take a time away from the vodka and the women inside and go, hey, buddy, there's a guy at the gate here. And I don't think he's going to stop until he gets in. I think we're close to that now. And the only thing that I think is working in our favor in terms of whether it's successful or not successful is, God, I'm going to earn some ire from my peers here. The Coinbases of the world, the ETFs, in my opinion, although these things are decent ways to buy Bitcoin for newbies, ultimately they are going to become arms of the state if they haven't already.
Oh, 100%.
Right. And so if you lose this idea of the peer-to-peer element of Bitcoin in favor of ETFs or transferring on Coinbase's Excel sheet, you lost already.
Yeah.
I think that is the most legitimate criticism of Bitcoin. The network itself, I don't know how much you know about like things like network fees, for example, but
I know.
So one of the things we tangle with now is, as network adoption grows, and it's growing by any metric, it's growing. You can look at the price, you can look at the wallets, you can look at the stock price of Coinbase and their active users, their DAU, whatever. It's growing. the problem is that layer one, the peer-to-peer portion of that network that everyone knows, loves, and really I think is at the core of the value prop, can't scale. And right now there's a competition between developers on Bitcoin, these guys who have put their heart and soul into the network, the protocol, and the asset, trying to build out something that works for everybody with very limited resources so they don't have to use Coinbase and the ETFs, while Coinbase and the ETFs have the backing of the government. And that to me is very much an uphill battle that I don't know who's going to win. And to me, that's the thing that really freaks me out a little bit.
I completely agree.
You know,
when you go give your money and sitting at Coinbase, you don't really own Bitcoin.
That's
you own Coinbase's promise that you own Bitcoin.
Yeah.
And ultimately, until you put it in your own private wallet and own it like privately, you don't own Bitcoin.
That's right.
And then then my problem is, even then, you're still expecting the network to continue to work.
Yeah, there's a lot of ifs, and I think the ifs, they dissipate every day in some respects, but the other respects they don't. I think a lot of people view the idea that the state will decide to go door to door to confiscate Bitcoin unlikely. I think it's unlikely too, but the chilling effect of getting a couple of big names to bend the knee is enough to really do damage to the likelihood that someone will ask you for Bitcoin, accept your Bitcoin, or pay you in Bitcoin or whatever. That's a problem too. And, you know, I'm a big disciple of the sovereign individual thesis, you know, this book that was written, I don't know, 20, 30 years ago now at this point. If you think about all the things that are happening now, we use the Canadian example, you know, in the recent budget, a few months ago at this point, but, you know, I don't know if you saw the rules around crypto reporting changed from having to report only your sales of Bitcoin for capital gains. Expected. They're treating it as a currency, fine. Now there's a proposal that you also have to report your buys. And I'll tell you, Kev, I can't think of a reason why anyone would want to know what I bought unless they planned on getting it from me sometime down the line.
Or taxing you.
Whatever. And to me, that's a scary thing too. And, you know, you kind of see this other places, the EU talking about like asset disclosure forms and all this. Slowly but surely, you're heading this direction. And my fear is that the cooperation between governments seems to be non-existent until they really need to limit capital movement. And then they figure it out. They all put the same jersey on and they're like the fucking 92 dream team. You know what I mean? And when that happens, you know, for me and you and for everyone else, it's going to be difficult to weasel out of if it does go that direction.
Yeah, you saw Michael Saylor, though, say that you just lose your wallet. You lose the passcode.
Yeah, good luck with that.
Basically,
the guy at the door with a gun is not going to care if you went boating on the weekend, you know?
Listen, and by the way, listen, I think that your ability to trade Bitcoin supersedes everything else, and I am not trying to suggest by any means that we should be outlawing it.
100%.
This is what's going to happen. Yep. I believe free markets for free people. If you want to buy Bitcoin, knock yourself out. I have zero need, and I'm just explaining why it's not for me. And ultimately, I'm a trader, and I don't get hung up. Nothing's a religion. Everything has a price. Like, I hate the gold bugs that tell me, you know, there's no price that they'd sell their gold. Well, that's ridiculous. Like, that doesn't mean anything. Like, for me, there's a price for everything. Like, at a certain price, everything is either a buy or a sell.
Yes.
And ultimately, it's just I look at this slight chance of an out of the blue thing occurring on Bitcoin is making me scared of it. But having said that, like, you know, I get it. Trading it is great. It's like it's getting adopted. There's lots of positives. I think that this network effect is, in terms of what Michael Saylor understood and took advantage of, is great. And knock yourself out if you want to trade it. Like, I have no problems with it. Like, my son trades the shit out of it. Like, he's just, I have no problem with it. So, like, I don't want everyone to think, oh, he's like advocating the government come and take it away, or he's worried about this. I'm just saying, just not for me.
Yeah, I know. I appreciate that. And it's, you make some fair points. Those are better criticisms than I've heard on this show before. We had Mike Green and Doomberg on, I think last year, back to back. And, I think
what were their complaints?
Doomberg was that Tether is propping up the price of Bitcoin, which, may or may not be true. I doubt it now. Tether's, I think, the 9th largest holder, including nation states, of US T-bills at this point, which is crazy. And Mike's case for it was that it's not an inflation hedge. And I don't know. I don't really view it as an inflation hedge myself. But anyway, story for another time.
Yeah. And listen, but like, if you actually look at it, because I was joking with the guys on the desk. I was saying I'm going on the podcast, and they were laughing because they were like, "What?
How dare they? How
Yeah.
dare they?
No, they were laughing at me because they're like, like I am a crypto skeptic. Like I'll be the first to admit. They're like, do they know who you are? Like, like, and I go, yeah. He seems very like I was very clear to him that I'm not going to come on and say how great it is. But if they when we were laughing about it, they were saying like, go look at Bitcoin. It's basically trading like Qs.
Yeah, it's high beta Q. I know. Yeah,
yeah, and I'm not. That's great. Like it really is. It seems to be a liquidity.
Yes, sir. Glad you said it.
Like as opposed to an inflation hedge. And I like, listen, do I think gold's an inflation hedge? No. Like it's a complicated instrument that has all sorts of different things. And actually, if you look at gold is traditionally traded more against real interest rates, meaning the interest rate after inflation. And when you lowered interest rates below the cost of inflation, that's when it's been taking off. So gold went up in the 80s because inflation was so high and interest rates were still relatively high, but they weren't as high as inflation. So therefore gold took off. But gold also took off in the 2000s for even in a period of very low inflation because interest rates were even lower. So traditionally gold has been a function of real interest rates. Now, having said that, I actually am a huge gold bull. And like, I'll just tell you briefly why I'm a gold bull. And yes, I could make the argument that governments are going to inflate their way out of it and we're going to have lower real interest rates. But right now, we actually have high real interest rates. If you go look, interest rate inflation's 2.5. US, overnight is 5 3/8.
Yeah.
So we've actually have the highest real interest rate that we've had in a while, yet gold's up. Why is that? Ultimately, it's because when the US government, after Russia invaded Ukraine, they confiscated their T-bills and their bonds.
Yeah.
They basically just zeroed them.
Yeah.
Because ultimately everyone thinks that you actually own something. No, you just own an entry at the Federal Reserve.
That's right.
Okay. And they zeroed them. And then everyone else, if you think about it, if you're China and you're sitting there as the world's largest holder of US treasuries, and you're like, holy shit, the US just kind of arbitrarily zeroed these guys.
Yeah.
They could do the same to us. And you have to, from a fiduciary point of view, say it makes sense to start buying something else. Now, you could argue that they should buy Bitcoin. I don't think they're going to do it. So what else can they buy?
That's only
one
gold.
of the things that you can buy that is truly nobody's liability is gold. So the real thing that over the past year and a half, that all of even the guys that were gold bugs were actually quite bearish gold. And I kept saying, you guys are looking at the wrong thing.
Yeah.
Gold has changed its personality. It's no longer trading on interest rate differentials. It's trading on this central bank kind of diversification of their foreign exchange holdings. And ultimately, that's why I think that gold is headed a lot higher, because I think that's just started.
Yeah. I think that's a fair characterization. Yeah.
So, and my point is that I don't like, I find gold bugs really annoying.
You don't like Peter Schiff? You don't like listening to Peter Schiff's podcast?
Oh, God,
an hour of flow of consciousness about gold. You don't like that? I'm surprised.
Because ultimately, if gold goes to $5,000 tomorrow, or whatever the number is, it would be a sell.
Yeah.
Like it would hit a point where you go, okay, this has got to a point where every mine is going to start producing tons, and everyone's going to go out and try to find like the next big, gold holding, and gold will go down. So it is not a religion. It's not something you can own forever. It is something you own and buy and sell based upon the investing merits of it. And I just happen to think that right now it's positive for gold. And I think that as they lower interest rates combined with this central bank tailwind, it's going to actually do really well. But it annoys me, anyone that doesn't understand kind of that is so wedded in a position or wedded in a way of thinking, as opposed to just kind of looking at the positives and negatives.
Yeah, there's really no benefit to being religiously tied to any asset, whether it's NVIDIA or gold or Bitcoin. I mean, I like all that stuff. But like I said, I take a lot of shit on this show because I do have an equity position, and my wife and I have a TFSA that has equities and no Bitcoin, right? I think heaven forbid I do something besides Bitcoin, to try and make sure that I'm
Have fun
liquid.
staying poor, Joey.
Yeah, exactly. HFSP, right? Fuck that guy. Yeah. Good luck out there.
By the way, he's got a great, I have to give him credit. That little video he made or someone made of Michael Saylor.
Oh, there is no second best.
Yeah.
That one?
No, maybe it is. No, there's one with like a EDM dance beat.
Oh.
It's catchy. Like, it's well done. No gold guys doing that. I got to give you guys credit. Like, it's by far and away, it's awesome that way.
We know that the mimetic warfare is the key to success here, Kevin.
Yep.
Okay, we understand that. You've been outstanding. I want to thank you for going a little long.
My pleasure.
It's fun to talk to guests who, one of the benefits of doing a podcast is you get to talk to a lot of people who are experts in their silo. And I like talking to Bitcoiners, of course, but talking to a guy like you who's got experience in markets, understands some of the things that we're concerned about, even though we're not necessarily 100% aligned on the fix in terms of what we hold. It's good to have these discussions and let people know, especially in Bitcoin, where we are siloed, that other people are out there thinking the same way we are. They're just not wearing the orange jersey, maybe not wearing it yet. Now, I have one more question for you.
Sure.
That I haven't asked in a long time. I used to ask this question when we were first starting out. Great marketing tool, okay? You should use this on Market Huddle when people inevitably are tired of talking to you and when you're doing interviews. At the end of the show, instead of asking what your favorite book is, nicest thing someone did for you, those are good questions. But this question is how you get other guests. Do you think that you could beat Patrick Serezna in a 40-yard foot race if you guys were in the parking lot together right now?
I don't know. That's a good question. I know if it was a drinking contest, he would definitely win. and I would stand a better chance if I could get him after the drinking, because he definitely has a problem. I don't know if you've seen the guy, but he's a complete lush. Like, he just drinks.
He likes to drink.
And
he likes to drink. Yeah.
Yeah. No, he's a recreational alcoholic is what I call him. So I don't know. We'll have to get him on. We'll have to do it.
Yeah. Well,
actually, one of the guys at the desk, our Blue Jays, the back catcher, the chubby guy. There's this chubby guy.
I don't watch enough baseball.
So I don't really watch it either, but the guys watch it. And there's some back catcher. This really chubby guy. And when he goes and he hits it and he has to run to first base, it looks like it's hilarious. Like, he's like, he's going, and this one guy's like, that guy's so slow, I bet you I could beat him. And the guy's he's like older than me, he's like late 50s, and I'm like, dude, like, there's no way in hell, like, as fat as that guy's back catcher looks, he's a professional athlete, you're not going to crush. And so we want to have this kind of, like, we want to time him. We haven't got it out, but maybe we could get Patrick there at the same time.
We got to do it. It. Kevin Muir, tell people where they can find your stuff. Macro Tourist, the floor is all yours.
They can go to the macrotourist.com, or you can go follow me on Twitter at Kevin Muir.
Outstanding. Thanks everybody for listening, watching, and take care of yourselves.